Welcome back. Wall Street Confidential here with Jim Cramer.
Simon?
I want to talk to you a little bit about oil. Oil has, it had a little bit of weakness, but it was very short-lived.
It only took one takeout of one pipeline in Basra. It's obvious that the Sauder's team has decided that Baghdad is stable, so let's go take apart Basra. And, I think we've all come to expect that kind of thing. I have long held that it's a supply issue, not a demand issue. I've always felt that at a certain price, oil would be used less. Actually, it really isn't. It's flat year over year, the use in America. We're no longer the marginal important country. But you take out one pipeline and oil goes up $5. And if you took out two pipelines, it'd go up another $5. And three pipelines, it'd take out another $10. So I think people are being very unrealistic about the shortage of oil in the world.
Okay. And how would you play that?
Well, I think there's a couple ways. I think that the way that seems to be forgotten is not just the drillers, but an infrastructure. There are big projects, and every time oil goes down $10, people think the projects are going to be scrapped. And every time oil goes up $10, people think the project's going to be on. That's not the way long-term projects work.
You need the diggers and things, whatever.
Yeah, like you take a Foster Wheeler. They have been building an order book this period during when their stock has gone from the mid-'80s to the '50s. A lot of that is Ray Milkovich, who's the CEO, has been very bad at guiding the street. It has a $7 billion market cap. That's a little ridiculous. It also has $1.5 billion in cash, so it's really a $5.5 billion market cap for a company that has the most orders building with oil up. So, I tend to think that infra is a great place to look when oil surges.
Now, you've got some listed here in a piece for Real Money. John Deere as well, Fluor, Transocean, Schlumberger.
Well, at Transocean, actually the people at Penn State, where I was yesterday, tried to get me to swap out of Transocean as a concept and into Noble Drilling. But Noble's too jack up. It's too deep, shallow water. Rig is deep water. That's where you have to be.
Okay, and do you like Caterpillar, which is also in
I like Caterpillar very much. I pulled up with a very high-level executive Caterpillar last night. Their order book is just incredibly strong, far stronger than people realize.
I've heard that they're capacity constrained, in fact, maybe.
On tires,
yep.
On ball bearings, and on engines. I wish they would buy Navistar. That would be a terrific way to get around the diesel engine shortage.
Well, let's hope they're listening and watching.
Indeed.
Thank you, Jim Cramer. It's Jim Cramer saying Caterpillar may want to buy Navistar. Stay tuned for more of Wall Street Confidential.